Good day, everyone. Thank you all for joining today's panel as we discuss rapid payments and modernization brought to you in partnership with Volante. My name is Nicolina from Connect Global Group, and I'm very pleased to have you all with us today. Before we begin, I would like to cover just a few basic housekeeping items. As you can see at the bottom of your screen, there are multiple application widgets you could use. All widgets are resizable and movable, so please feel free to move them around to get the most out of your desktop space. You can expand your slide area or maximize it to full screen by clicking on the arrow in the top right corner. We would of course love to hear from you, so please submit your questions to us at any point during this webinar. If we do run out of time, we'll make sure to follow up with you in a separate email after the event is over. Now, for the best viewing experience, we recommend using a wired internet connection and closing any programs or sessions that are running in the background. Finally, a reminder that a copy of today's discussion will be available in the next couple of hours, so please look out for that email. And without any further delay, let's get started. I will now hand you over to our moderator. Over to you, Maurits.
Thank you for the introduction, Nicolina. Hi, I'm Maurits Pretorius. I'm the Chief Strategy Officer at PASA. Today I've got a distinguished set of guests with me. I'm going to introduce them very shortly to you, but I just want to make a few opening comments about our topic today. So we're going to talk a little bit about modernization and in particular faster payment systems or real-time payments. In our country, our Reserve Bank uses or reserves the term instant payments for screen scraping, so we're going to refrain from using that term. Hopefully we're going to explore this topic and it's going to be interesting to everybody. So perhaps a few opening comments. I think the first thing one observes that in many countries worldwide, their modernization journeys or efforts are spearheaded by faster payment systems. And today we're going to look at South Africa's faster payments systems. We've got two of them at this stage. And also about modernization on the other hand, and that includes all the efforts in electronic payments towards ISO 2002 standardization, also a few interesting developments in that space. Now, despite the importance of taking learnings in this space from all over the world, I think it's the developing countries that holds the most interest for us in South Africa because they struggle with similar problems than we do. We definitely, I think, see high usage of cash. We also observe that is often one of the key reasons why some of the other countries would look at systems like this. And one then in particular notes a recent trend towards these payment systems. So PIX, for instance, Brazil's faster payment system or real-time payment system has been introduced in 2020. Nigeria and Africa has been an earlier driver of that with NIP in 2011. PromptPay, Thailand's payment system, became operational in 2017. The UPI India's became operational in 2016, and then Mexico with Cobro or Kodai, as they call it, became operational in 2019. Now, South Africa introduced its first fast payment system, which was called RTC, and it stands for Real-Time Clearing, in 2006. Now, that was before the ISO 20022 times, and therefore the system was based on an ISO 8583 standard, message standard. We actually saw very slow adoption in this system. But recently, it is South Africa's fastest growing payment system, yet it's off a very low base. Something is definitely happening in South Africa, which we believe makes the time right to think about real-time payments once again. I think since 2006, we saw a number of things changing. Like, for instance, account penetration changed from currently it's around 81%, and that's almost a 63% increase over the 2010 levels. Also, digital payment penetration changed quite dramatically from 14% in 2003 to 55% in 2021. But I think the question is still for us, is it enough? And the reason I'm saying that is 30% of our account holders use their accounts as so-called mailbox accounts. In other words, they withdraw the money immediately and use it in the form of cash. Now, with all of these things in mind, in South Africa, since about 2017, we went into a process where we investigated a few things on a deeper level. First of all, we looked at a desired target state architecture for payments in South Africa. There was a study tour. And today, with my panel, I want to delve a little bit deeper into a few things and try and see if we can get answers on things like where and how does these innovations fit in with regard to economic and policy goals. Why is there a need for a new system to replace our current real-time clearing system? What will drive adoption of this new system? What is the expected market response? What other modernization did we already embark in South Africa? Often we've noted that your first modernization effort is actually your most difficult one. And then if there's time, let's look a little bit into the crystal ball and ask ourselves, what will follow? Is it something in the form of CBDC? What we are creating now will lay down the platform for CBDC? How does it fit in with convergence, with payments as a service, with cloud services? And I'm definitely not going to answer or find those answers. For that, I've got a very esteemed panel of experts, and I'm going to ask them to introduce themselves. So the immediate person that I'm seeing on my screen here is Rufeida. So can we start with you, Rufeida? If you can perhaps just introduce yourself and say what is your payments involvement?
Great, thanks, Maurits, and thank you for that introduction. I'm really pleased to be part of this panel. I think they're great thought leaders sitting amongst us here. I'm excited to hear all the views. And Maurits, you've cast the net really wide in terms of the range of topics we're going to be covering. So firstly, my name is Rufeida Banabai. I head up payments at Investec. I've also been playing a role in the Rapid Payments program as we're building it together in the industry in South Africa. And really pleased to talk about that and other ways in which we are trying to live up to the challenges of modernizing payments in South Africa.
Thank you, Rufeida. And then the next person I'm seeing here is Ravi. Ravi, can you introduce yourself?
Maurits, thank you. Thanks for the invitation to be part of this panel. I think it's a great topic to cover. My name is Ravi Shanmugam. I'm the CEO of EFT, Electronic Funds Transfer Product House at First Rand Bank, and integrally involved in Rapid Payments project in South Africa, as well as this is the second modernization program. The first one was DebiCheck, which has been a long time in the making. And hopefully we're at the tail end of DebiCheck, but we'll see how it goes. Yeah. So Maurits, thanks once again. Over to you.
Thanks, Ravi. Now we're looking forward to your insights on DebiCheck. Hopefully there's a few learnings. Marika, you're the next one.
Thanks, Maurits. I'm also looking forward to the discussion. I think it's going to be very interesting, and I appreciate the topics that you have positioned. I work at Nedbank, I am the Corporate and Investment Banking CIO, and I'm also accountable for all the payment innovation from a technical enablement perspective. Back to yourself. Thank you.
Thanks, Marika. Then Domi.
Yeah, so hi everybody, and thank you, Maurice, for the wonderful introduction. I'm Dome Scafidi, Vice President of the Global Industry Regulatory Affairs in Volante. I'm leading a global team composed by SME, so people like me coming from the industry, regulatory bodies. In my past, as I'm coming from the European Central Bank, part of the target working group designing the RTGS system. I'm currently advisor of Bank of England for the renewal of the payment ecosystem, and I think that is nothing more exciting than discuss the topics that you explained today, because I think that South Africa is going through a great transformation, taking benefits from the regulation, but mainly from the market requirements. So over to you, Maurits.
Thanks, Domi. And I think last but not the least, Simon, if you would like to introduce yourself.
Hi, Maurits. It's great to be on the call with you today. My name is Simon Just. I'm the Group Head of Payments at Standard Bank and also have accountability for payments in South Africa. And yeah, for me, I've been a retail banker for a long time. I had a short segue out of banking, and I'm now back. And it's really great to be coming back at a time that we're implementing something as profound as rapid payments. I think the impact worldwide, as we'll see today, has been quite phenomenal. The promise for consumers and the promise for the economy as a whole is just incredible. And so, yeah, really looking forward to discussing the topic and unpacking it with the team on the call today.
Thanks, Simon. So welcome to you all. So where do we start? I think a good place to always start a topic like this is from the regulator's perspective and from a policy perspective. And in South Africa, we've got a national payment system strategy framework that's called Vision 2025. In Vision 2025, 9 goals are highlighted. The interesting thing about the 9 goals is if you start to compare them to each other and ask yourself the question, what drives what? You start to see that probably the biggest driver of everything, in other words, the thing that needs to lead is one of the goals that is called a clear and transparent regulatory framework. Then you see a number of the other goals, and I think of particular interest for us today is goals like promote competition and innovation. So the Reserve Bank is quite explicit that they want to open up payment systems, flexibility and adaptability. In other words, payment systems needs to be fit to deal with the constant change out there. Interoperability is another one. And then one starts to also see the impact of all of these things on financial inclusion, which is one of the goals there. But it looks as if financial inclusion is the result of these things. It's not a driver of these things. My first question to the panel is, if you think about modernization in general, but also a new drive towards a real-time payment system, how do you think this supports these policy goals? Can one of you describe for me how you believe this actually supports the Vision 2025 goals? Rufida, can I press on your button to take us there?
So you've done a really good summary of Vision 2025. I think for us as bankers, it's kind of, and payments people, it's the code we live by, because those goals enshrine what I think is at the heart of that sort of code, which is all about financial inclusion. And I'm always at pains when I try to evangelize payments amongst bankers, which is financial inclusion is asking us to go a step further. As owners or co-owners of national payment system infrastructure, the ask is we've created financial inclusion in a formulaic way, in the sense that most South Africans actually do have a bank account. But true inclusion comes through the touch point of a payment, the movement of value, and preferably in what the Vision 2025 is asking us to do is to promote that touch point through more accessible means of making enabling payments and the movement of value. So it's not about just access to a bank account, it's about access to payment services. So how do we do that? And how do we do that as bankers and co-owners of this national plumbing? I think is truly what the vision is trying to inspire, which is, let's look at the technology we have in place. Let's look at the national payment system infrastructure we have in place, and then co-create. Because we've got the technology, yes, it was best of breed. It still serves us very well. In 20 years have passed since we implemented RTC, real-time payments. And now the ask is, well, what can you do with what's in place, or what you can build to enable, and I know what you said, don't use the word instant because it's almost synonymous with screen scraping, but I had said in my soundbite for the webinar that instantaneous is trending, and that really is where the world is going. You know, no longer are we comfortable with the 2 to 3 day lead time before payment will reflect in a cross-bank interbank bank account. The ask is sub 10 seconds. So that flexibility, that adaptability also is a high demand, because if you are able to enable payments through a mobile device, and that also obviously is underpinned by the fact that digitization is at the heart of Vision 2025. And once you make it mobile, you make it far more accessible and far quicker and easier and far more adaptable. And obviously there are lots of things that need to be put in place and to line up before everybody has access to the mobile technology that you need. But generally, we've seen the world over that part of that adaptability is addressing the need for instantaneous, addressing the need for ease of access in terms of device, and all of those then will eventually, it's a journey, take us to the point of leveraging that flexibility and that need for adaptability to a point where we can see true instantaneous payments become a reality for the broader South African mass market.
Thank you, Rufida. And if I can continue with you, Simon, so something in what we're building here is also trying to answer to the demand for more flexibility and also for payment systems to open up. What is your views on modernization, what we're doing here, and how it supports those goals of allowing, leveling the playing fields, allowing other players into payment systems, and creating something that's just much more flexible than what we currently have?
Yeah, I think too often, Maurits, we think of payments as bankers and payments professionals too technically, but one really needs to spare a thought for the consumer. I think consumers in their day-to-day lives are hugely reliant on payments. I just take over the weekend the number of questions I heard in passing around, who do you bank with? How long will it take the payment to clear? And you start to really realize the impact that we have on people's lives. Thinks of consumers, it can be the difference between getting healthcare when you need it or not. It can be the difference between, taking care of family or loved ones. And in the case of small business, the difference between success and failure of a business. And so payments are absolutely vital and pivotal to human life, and enabling them, I think, obviously crucial. And so I think this regulatory reform on opening up interoperability, increasing the velocity of payments and the amount of time it takes for funds to clear across parties, and also the introduction of other participants to the ecosystem really extends and plays a massively meaningful role in society. So absolutely crucial that we've done it. The impact for consumers, I think, is going to be largely positive. Payments are going to become more pervasive across different form factors. We've seen where in the rest of Africa, mobile money has taken off at a rocket's pace in the absence of perhaps formal banking infrastructure in some countries, and has unlocked massive value from a financial inclusion perspective, but not so much in a South African context. Yet, as you said earlier on in your introduction, so much of cash is withdrawn at the beginning of the month because it can't be paid over to the people I really need to pay in situ. And so I think the power of regulation and the way it's stimulating banks, payment service operators, and other participants in the industry to open up the ecosystem is really going to unlock massive success for all participants. I think the key for participants like banks and other operators is to embrace it and really place the customer first. And I'm sure later on in the call, we'll get onto the opportunity that lies in decashing. Not be seen as something that's restrictive. We really are opening payments up for an industry, for a country, and I think it's about time.
Thanks, Simon. Dome, Volant, your company is operating across the globe, and you are probably in a good position to say, what are you seeing in other countries? Why do they adopt these payment systems? What kind of impact do they envisage it will have on the economy? What are they trying to achieve through these payment systems? Is it similar to us? Is it different? Give us your perspective.
Yeah, thank you, Maurits, for the question. And you're right. We are providing our support to 8 of the 10 top worldwide financial institutions, and also we are working in several payment ecosystems. So innovation is a global word. Why we are going to talk about similar standards, so adoption ISO 20022? Why we need to move money in real time? And the reason is that, of course, there is the regulation that is coming into force. And we know that in South Africa, a lot is happening, and also following the experience here in the UK and SEPA in Europe. The same in Buna, where I spent interesting times last week. But the step moving forward to the innovation is exactly the same. Why is important? It is what we see, that all countries move together. Because there are financial institutions that are, of course, investing in new use cases coming from the market requirements, thinking about corporates that need to move liquidity in real time. But in the end, this game is working only if all stakeholders move together. So this is why it's important. Modernization is at a country level, at region level, and not individual level. Because when we talk about crediting the beneficiary account in a couple of seconds, confirming the money are in the beneficiary account, of course, there are at least 2 parties involved, so the sender and the receiver, and the originator and the beneficiary. So it means that can be the innovation is an individual level. And this is why South Africa and the 2025 vision that you described before is the perfect recipe for a success. And then we can talk about many use cases that are involved in this interesting journey through the modernization.
Thanks, Dome. So now we get into the question, how would such a system shake things up in South Africa? I first of all want to ask Ravi and Mareike to answer, for me, the difficult question, why didn't we not decide to continue with RTC? We, for instance, see many of these new payment systems when they were built, for instance, PromptPay in Thailand, it was still built on a 8583 standard, and later, I think, converted, the same with the UPI. Ravi, what's the business sense about this? And Mareike, what's the technical story behind the decision to start from the ground up?
Maurits, thanks for the question. I guess RTC has served us well as a South African industry. I think in terms of real-time clearing payments, RTC, there's been a significant growth in both volume and value, despite a lot of the business pain points that we're feeling, in excess of 30 to 40% growth in the industry at the moment. I think the significant differences in some of the pain points that we're feeling in the industry is that, and Marika will cover the technical aspects, but really, I think given where rapid payments is going and the business opportunity that we have in rapid payments versus RTC, I think, RPP will serve us better because of the way we're going to be thinking about constructing rapid payments, right? So I think, our approach to the construction of rapid payments, where we taking the overlay services in proxy and request to pay as being abstracted above the core clearing and settlement rail, is actually going to serve us quite well in terms of making an instantaneous sub 10 or 15 second payment. And obviously the key thing today with the real-time clearing in South Africa is when we do have a failure in RTC, the first time that we are aware of that failure is when customers complain. And I think rapid payments changes the game on that in terms of constantly making sure that customers are informed of where the payment is at any one point. So I think from just the business approach of rapid payments versus RTC, I think RTC served us well. It was a good real-time clearing rail at the time, but just given the way it was constructed and the services not being abstracted above the core clearing and settlement, I think rapid payments will serve us far better going forward. Thanks, Maurits.
Thanks, Ravi. So it's perhaps that certainty that we got in the process, that's what you're alluding to, that we didn't have with RTC, that we're getting with the new payment system. Marika, a little bit from a technical perspective. Now, perhaps I also have to ask you, this whole effort also came from an effort to actually introduce a new target state architecture for payments. In other words, much more platform-based, much more modular. Ravi referred to overlay services that are abstracted above. Tell us a little bit about the architecture and what's different. What makes this such an innovation and so different than RTC?
Thank you, Maurits. You and Ravi have already explained the benefits quite nicely. We have broken up our components, which means that our innovation should be faster and cheaper, where in the past we have usually used what we call monolithic solutions. So everything had to be regression tested and everything had to be checked before we could move. But I think the three things that I think in the architecture would most certainly make an enormous difference is the architecture is set up in such a way that the solution is far more resilient and cyber secure. And for a solution like this, resilience and security is most certainly very important. The second point is that this architecture is very strongly API-based. And that is very different to RTC. And it talks to our ability to really make sure that our businesses, and specifically our small businesses, can access payments in a far cheaper way. So it's not just about accessibility, but it's also about affordability. So our API starts allowing us to grow the pie, but in a way that people can still compete, which I think is really important, specifically in Africa. And then the third one is our ISO 20022, which we absolutely love. All the extra data elements helps us to start understanding our clients better, make better decisions, make faster decisions, and exactly what Ravi was saying, respond faster, being able to understand the responses faster, and therefore actually manage the whole payment environment better. And that's building on what Simon and Rufaidah were saying, because that enhances ultimately our client experience. So those would be the three big things that I can see that is fundamentally different to RTC. Thanks, Maurits.
Thanks, Marika. And therefore, we, in a big way, actually tick some of the national payments system strategy goals, the Vision 25 goals, like flexibility and such. I think you've explained it very nicely. Now, I think the idea is also that this payment system must open things up a little bit. Whilst we do see in jurisdictions like India that the Reserve Bank still maintains it needs to be an account-to-account payment system, what we've built here and how we've built it certainly has a potential for wallets. So what does it mean for wallets, Simon?
Yeah, well, I mean, Maurits, as I was saying earlier, wallets have been growing, out the blocks across the continent, particularly during the pandemic. And we've seen even with South African mobile network operators where they've struggled historically to get, groundbreaking growth, the interest in wallets has definitely taken foot in South Africa. We see, from a Standard Bank perspective, significant growth in our products in the emerging market, things like our voucher-based instant money product and the associated wallet with it. But I think the challenge with these products has always been interoperability. So they've been hindered by one's ability to get cash in, cash out, and this ability to pay at my point of sale, the place that I've chosen to shop. And again, this is why I withdraw my funds at the start of a month. And I think what RPP really promises from a wallet perspective is the opening up of this emerging tier of banking to create complete interoperability between different bank accounts, from wallet to account. And then I think importantly, it completely levels the playing field between bank and telco. So as one reaches MVP3 and the later stages of the RPP implementation in South Africa, I think there's a lot that gets opened up in terms of emerging market transactability and the decashing of society in particular. So I think RPP with its features unlocks so many payment opportunities, person to person across wallets, these informal economy payments with many main market customers, now being able to pay people they use in their daily lives, and then obviously request to pay from a wallet perspective, and just the number of use cases it opens up to pay merchants, to pay in collection scenarios, and now not only to somebody who traditionally just might have held a bank account, somebody who has a wallet in hand, now able to participate in a number of transactions that previously maybe weren't possible to them.
Thank you, Simon. So what we can basically then say, it's a big tick also then for opening up payments, for opening up the payment system, for making things like wallets interoperable, and therefore just making it much easier to do a digital payment compared to what we found up to date. Faster payments, faster fraud. I've read in the one article in The Economist, Brazil, where their PICs started to see an onset of what they call lightning kidnappings. So where people are kidnapped and where they've been forced to actually make fast payments. And they had to be very responsive and therefore started to do things like lowering the limit at night. Now, certainly in a payment system like this, you also think about how you're going to deal with faster fraud, fraud in general, new fraud patterns. Again, Dorme, from a global perspective, what are we seeing around fraud, management systems and faster payments? What is the trends that you start to see there?
Yeah, I mean, good question, crucial question. And it's clear that anytime we try to speed up a process, like you said, the risk of fraud and someone that is going to steal the data is becoming common and common. And also here in the UK, we saw the number of the transaction, of the fraud that are increasing. So the bank in general are trying to reinforce the system, but how? The security. For sure, the solution is not only lowering the amount night time, considering that we are working real-time payments and fast payments around the clock. The point is, and just to give an example, today there are almost in the checklist 4 million combinations that need to be checked anytime we submit a payment. So you can imagine that if not only the payment engine, but all the chain, the components that are part of the fast payments is not fast and built to deal with the real-time payment world, of course it's not working. Now, when we talk about fraud, AML, session screening, thinking about the cross business. So there are more or less, and it's happening very often that we have one leg payments. So payments that are coming from another regions that need to be processed in the region. The important thinking how we can deal with this complexity. And to be honest, the big risk in fraud today is not stealing money. Thanks to we have the insurance, but stealing data. So with adoption or the new standard, and I think we know ISO 20022, and we have a lot of information that are going together with payments. So when we talk about fraud, the most important thing that we need to consider in the innovation the system is how to protect data. Also because today there are many collateral projects coming from the open banking, like artificial intelligence, aggregation of data analytics in general, because it is what corporates, big biller, merchants are asking banks to do. But to do this, we need to have a fence and infrastructure that allow to do this in security.
Thanks, Domi. Let's stay with fraud and fraud management, cyber security for a little bit longer. I'm going to ask Rufeida and Ravi as chair and deputy chair of the STEERCO that implements this. We certainly had interesting discussions about fraud systems. Any key takeouts so far for us with regards to the management of fraud in the implementation of a new system like this? Rufeida, you want to go first?
Yeah, so Maurits, thank you. I think it's probably the one thing that keeps me awake at night, understanding how we deal with real-time fraud as it becomes more and more a reality for us, not just because we're worried about the data risks, like Dome had said, but also because there's a high risk of financial loss and liability on the part of the banks. And, when it impacts your bottom line, and our budgets on fraud across all payment streams increase year on year, implementing a new payment system, particularly where, the key value proposition is how instantaneous it is, it keeps me definitely awake at night. And I think what also frightens me is the rate at which the fraudsters are always, it would seem, one step ahead of us. So with that, the challenge for the Rapid Payments program was, what could we do, what can we do to go live in a way that leverages what is available in terms of the ability to manage through very, I would say, transactional parameters like an item limit. So how low can we keep the limit at the beginning to manage fraud? And we quickly realized that there's probably a gated approach to how we can get to the Holy Grail and all of the good things that we want to do around managing fraud. We definitely, because of some limitations already in current, individual bank environments across the board, we're not in a place to put in what I would say is that Holy Grail in terms of the 10 things we would want to do to manage in-flight
transactions that are at risk or already been compromised. So the transactional parameters that we can manage, I think that's what we're going to try and achieve going in. And even then, I think the ask is amongst the community, because it's a communal effort, to how we will share data or enable access to data that will help manage, track, see patterns and trends, allow for teams to track suspicious behavior and to act on it quite quickly. It is about how the community comes together, how we feel comfortable to share this data. It's a first in South Africa, or certainly in the South African banking environment. And it is also about the mechanisms we put in place to enable the fraud management or ops teams sitting back at home in those banks to act on those, and to act on those pretty quickly, with consumers who range in terms of very, very astute consumers to consumers who are vulnerable to scams and all sorts of fraudulent activity. So the big thing is, what can we achieve by in time for an initial go live, and what risks are we willing to accept as we ramp that up to when there's sufficient data in the system that tells us what behaviors we should be seeing, what transaction throughput is sufficient to create that sort of trending or tracking around the behaviors. I think another key thing for me as we launch into this, and I heard someone say today on a completely different topic, which was actually about disasters or natural disasters. Most natural disasters are not without human intervention or involvement. In the same way, for me personally, most fraud activity is not without consumer lack of awareness and consumer education opportunities. So I think we have the benefit that Rapid Payments is South African Inc. Implementation. There's a lot of community goodwill amongst the banking partners that are involved in the program, and that we will spend a lot of time, particularly with yourselves, Maurits, and the Payments Association, the Banking Association as well, and other government agencies, to look at what we can do around ramping up fraud awareness in the country, especially as we expect more digital inclusion, and we expect consumers to be, literally at the click of a button to be able to move money. So in a nutshell, I don't think I've covered all of the detail around what we want to do and can do. I'm going to leave it to Ravi to share some of the more intricate detail around some of the steps we want to put in place.
Thanks, Rufeda. Ravi, before we go to you, just to summarize, Rufeda, you're saying there's definitely a vision of a very robust fraud management capability, but it's a progression towards that vision. So we have to kind of work with what we have, and we have to slowly progress to that ideal state.
Yeah.
Ravi, anything to add from your perspective?
Yeah, thanks, Maurits, and I think Rufeda covered a lot of the points. I think what's quite key for us, Maurits, I mean, you kind of covered it at the start of when you introduced the topic, when you said rapid payments or faster payments, faster fraud. I think as a banking industry, and I think as good corporate citizens, we cannot any longer, in this world of digital payments, we've seen the trends in the past where we've had a massive gap between customer losses and bank losses, right? So what we used to do is, fundamentally, if a customer compromises his account credentials, or his channel credentials, we would say that's a customer loss. I think in this world of digital payments, we can no longer say that any longer, right? And as we move into more rapid payments, we're having to, especially if you start to look at the market segments that rapid payments is going to serve predominantly, we're finding that in this world of electronic payments, the vulnerable segments of the market today is the older folks, right? The people that are on pension that are actually getting scammed by a multitude of electronic fraud. Now, if you start to look at rapid payments and some of the segments of the market that we're going to be bringing into the underserved markets, I think we're going to have to make sure that the fraud systems are robust, as you put it. And I think in this world of digital fraud, it's not a competitive issue, right? And I think lessons learned from RTC, we need a common approach and a collaborative approach across the industry. And I think, a lot of the work in the Special Purpose Committee around fraud, and that's why we've paused and we took a step back and we said, let's do this, look at this fraud component and really make sure that we're reevaluating our approach to fraud. And I think it's key for us from a collaborative perspective that we have a common approach, right? We're sharing data points. We've got fraud injection scores that come through from the banks, from the originating bank to the recipient bank. And I think it's about sharing data at various points to allow the participants to make the right decision. And then besides just sharing of data, it's about your ability to interject in the transaction, and it's your ability to if you have to stop the transaction and make sure that you are interjecting in that fraud up front. So I think it's about a common approach. I mean, we're actually debating how we manage this, because you could sit back and develop quite a complex fraud solution that, as Rafael has put it, we're trying to balance between making sure that we have enough, the right fraud elements built into the system, but also that we enable ourselves to be able to go live at the appropriate time. So I think it's going to be a fine balancing act for us as an industry. And I think it's a collaborative approach across the industry participants to actually make the fraud solution work. Yeah, thanks, Maurits. I mean, I can cover a lot more detail, but I think that's not the intent of the discussion here. Thanks.
Yeah, but I think the most important thing you're saying, Ravi, is fraud is not a competitive area. It's an area where we actually have to collaborate very closely, and we have to work together to actually deal with the scourge of fraud and rogue elements in payments. From a consumer perspective, I'm just wondering, and Simon, you probably the consumer man here, the fact that I now have a proxy that you're paying me via, or I'm paying via an alias, or I'm paying to an alias. In other words, my details aren't visible to everybody, my account details and so on. Is that not to some extent already protecting a consumer?
I think in some respects, there's a lot around personal data protection that one might argue is built into the solution. I think the fraud parameters still prevail, though. I think once that proxy is identified, if you've used a simple form of proxy like your mobile number, at a bank, the base vulnerability from a fraud perspective in particular is still there. So I've always viewed proxy as an act of convenience and personalization and accessibility. And so, yeah, I'm not sure the proxy per se, while by design one might argue, protects to a degree. I'd say that the core vulnerability is still there in the platform, and it's triggered by the factors that Ravi is alluding to in his response.
Thank you. I think that's quite insightful, Simon. So core vulnerabilities still there, new vulnerabilities perhaps introduced even as a result of proxy, an alias system, perhaps more of a function that contributes to convenience and ease of use. Now, I think let's get to the big question. So what is this going to do to cash? I think in many of the jurisdictions we've noted that there's this kind of desire to reduce cash. Yet, whilst there's a digital uptake, cash still seems to grow. It's definitely some of the projections we're seeing on our side that cash is likely to grow, perhaps not as fast. But it must to some extent affect cash and the usage of cash. So any views on that? And perhaps can I again start with Ravi on this one? Ravi, from a bank perspective, what's it going to do to cash?
Maurits, I think, look, I think rapid payments is a viable alternative to cash payments. I think it focuses on achieving greater penetration in the underserved markets, the lower end of the bank market, and small informal merchants. I think that really, assists the SARB in achieving their vision of financial inclusion and, digital financial integration. And it also, I think, creates a multiplier effect, right? So, because we're going to get a lot of data points and footprint of an environment that was previously invisible, because cash is invisible, right? It's anonymous and it's invisible. And I think this presents enormous opportunities because it is a complementary strategy for cash migration. I think also it presents enormous opportunities for other products and services, not just in payments, right? But if you look at the market segment that we're trying to target, it presents multiple opportunities around inclusion from other aspects of services that these market segments have never had access to, like lending, investments, insurance. So I think, rapid payments and it's in its entirety, has multiple opportunities. But I think the key one is obviously cash displacement and replacement. And I think, it's key. I guess the point is, will we ever reach a point when we ever get rid of cash, right? We've been trying to do this for some time now, from cash to card migration. And I think rapid payments presents an alternative, additive feature to complement the strategies that we've been on in South Africa from cash to digital migration. Thanks, Maurits.
Thanks, Ravi. Yeah, so cash is still a sticky topic, and I think, if you just think about the almost 5 million businesses in South Africa, but only 500,000 card acceptance terminals, one see the mismatch and the fact that many businesses still have no other option but to acquire in cash. As a matter of fact, I also see a stat that says about 800,000 smaller and micro enterprises have no option, not even EFT at this stage. So they only acquire in cash. So definitely by putting a system like this, an acceptance capability like this in the hands of businesses is going to help. But it's going to be a journey because I think there's another study that found about 59% of businesses still find cash to be convenient, and reported to be easy. So, any last thoughts, perhaps, on cash and the journey on this side?
Maurits, I think the PIX journey in Brazil, while maybe not completely comparable to the South African market, it has many attributes. Over 180 million users since 2020. What I found astounding is that volumes had reached 80% of debit and credit card transactions within that short period of time, yet cash was still flat. So, they weren't reporting massive decashing necessarily, which is a harder thing to track. But certainly, one has to ask, are we creating true economic interaction that wasn't previously happening? But massive opportunity in the rapid payment ecosystem to displace other transaction types. And if it's in like Brazil, where it was mandated to be placed front and center in all apps, it was made free, P2P. Those level of growth in P2P payments certainly will start to pull through into the cash economics in society and overall decashing for sure. I think 73% of payments in Brazil are P2P today, and it just shows how what was going hand to hand in notes, I think, will come through perhaps in a lag as a fundamental decashing of transactions that were previously taking place in notes or coins.
Yeah, very interesting.
Maurits, I wanted to say I'm probably the outlier because I totally agree with Ravi and Simon in terms of opportunity, but I think there's also a reality, in South Africa that we must face, which is the low levels of digital inclusion and the behavioral changes that are required to shift to digital payments require a lot of policy changes, I think, or governmental agency alignment in terms of, I think, certain key things to be put in place. So for me, and my heart is really with the Rapid Payments Program, spending 3 years working on it in the industry, but been quietly sensitized and slowly to the realities of cash in the country. And one of the key things for me is, there's certain barriers that we need to overcome, certainly for consumer take-up, and those include access to, for example, an affordable, a cheap smartphone, access to affordable or free data. And I saw, the 10 gig for every household policy plan. Those are the type of features for this entire program to come together that need to line up in the country before we start to see true reduction of cash. So the business case for rapid payments was built on a small but reasonable displacement of cash or reduction of cash. And if we want to stretch that target, I think there's a huge reliance on ourselves within the banking industry as participants with the right government agencies to look at those other macro factors and try to encourage that they come into the broader program or in time, separate to the program, for digitization to become a reality in the country. So I think for me, it's a good balance of what we're trying to achieve in rapid payments. It's looking at those factors within the socioeconomic environment that we operate in, and then also thinking about appropriate use cases for cash that may have to persist for a period, and be pragmatic about what those are before we make bold statements about planning massive migration from cash. So I'm a little bit of a realist around it. I would love to see that we take up on rapid payments to as high as possible in terms of our stretch targets, but I'm very mindful of the reality, and our cash colleagues in the industry will probably say the same.
Yeah, thank you, Rufeda. So yeah, it's interesting. You see this astonishing adoption in, for instance, PIX. Simon, you referred to it, 118 million since people using PIX since they started in 2020. I think there was something like 3.9 billion payments already made in PIX. You, Rufeda, say there are certainly other drivers of adoption that we need to consider, and perhaps we have to moderate our picture a little bit for South Africa. But talking of adoption, and if I can stay with you for a moment, Rufeda, certainly we didn't do a great job with RTC to make this a ubiquitous instant payment system, and probably because it was designed for a different use case as well. But with everything that you have in mind that could detract from the adoption, I think there's certainly a few things that we have control over, that we can do. What do you think would be some of the key levers to pull to support adoption of this new system in South Africa? Perhaps I have to also just say this, one of the things that we do see in South Africa is this is not a mandated system by the central bank. The industry has decided to go there themselves. Perhaps you can also speculate on, would it have helped us if the Reserve Bank mandated the adoption of a payment system like this, for instance, by all banks? Your views on this?
Well, Maurits, we spoke, and a few of us have referenced competition and the freedom, for competition to thrive. And I think that with great respect and deference to central bankers and regulators across the world, often that sort of gentle nudge is great. And Vision 2025 represents that gentle nudge for me in terms of the regulators. But a directive for me sort of does, to an extent, limit, I think, the freedom to operate and freedom for participants to come together and co-create in a competitive environment. So, and in a competitive environment, we want to see grow and to allow all sorts of stakeholders to become participants in. So I'm not a huge fan of directives when we want to innovate. I think the participants across the geographies we've spoken about, and yes, in some there were mandates, but I think in the main, there was a very clear and deliberate strategic intent to enable digital financial inclusion, to enable rapid payments, to value the importance of the significance of payments as a touch point, to eventually aid in growth of the economy by sheer inclusion. So I'm not a fan personally. It's a personal view. I think what we have seen in what we've curated since the design of the Rapid Payments program has been with that gentle nudge overarching and has enabled, for me, the fostering of great creativity to come up with the features of a payment service that we are all comfortable with. It meets the requirements that we understand the regulator to have outlined. And I feel that when you talk about real-time payments, I can see the contrast and I hear why you're referencing it. It was also in the spirit of co-creating, doing the right thing for, at a point in time in the economy and in the payments industry, but then it didn't take us to where we really wanted to be in terms of access to it and it becoming mainstream. I think you're dealing with a different economic climate in South Africa right now, with the different, for me, appreciation and mindset amongst bank partners specifically, and I'm speaking very generally, but there's a greater sense of responsibility around what we as the owners of payment services and direct access participants to the national payment system feel that we need to do and should be doing in the country. And I think the Rapid Payments program brings all of those good things together. So good faith, goodwill in terms of what we want to enable for the country, the spirit of innovation. So everybody's come generously forward and helped build this payment service and best of breed technology. And then at the same time, remember there's economics about this and there's a bottom line. And, a different, for me, mindset has come to fruition in the banking industry at this time in terms of how we want to take this forward. Very mindful of the challenges we face on real-time payments as it journeyed and evolved, because I don't think it went where we wanted it to be, and I don't think we made the most of it. And I think there's, for me now, the right time, the right place, the right set of economic factors, and the nudge from the regulators to guide us in the direction of rapid payments that we've arrived at. So I'm very pleased with how we've co-created.
Thank you, Rafida. I'm conscious of time, but there's still a few questions I think we should pursue. And the one is the way we're dealing with this project. This is a fairly new project. It's new architecture, Mareike, as you've rightly indicated. We're following more of an agile approach. We seem to actually have very ambitious targets about how fast we actually want to implement this. Yet it increasingly becomes clear that it's difficult. It's not that easy. However, I think we're still within reasonable timeframes. So far, what we're seeing across the world is these payment systems are not built in less than 2-3 years. I think South Africa is probably kind of on par, more or less, with that. But Mareike, what makes it tough? What makes the introduction of a brand new payment system like this tough from a bank's perspective?
I think firstly, Maurits, Ravi referred to DebiCheck, and I don't think everybody who's learned from ISO 222 is on this project. So there's many people who are learning again on ISO 222. And everybody who's in payments will understand it's not the happy flows that counts, it's the negative flows, the R flows that counts. And I think it's the R flows and the negative scenarios that creates challenges. In addition to that, I know many of the participants are trying to get this into cloud. Now, cloud, and it may be platform as a service, infrastructure service, software as a service. There's also many models. But I think cloud, it gets there's always a perception that cloud is easy and cloud is quick. It's most certainly not the case. There's significant refactoring that's required, particularly if you want this platform to also operate in the wider bank and in the wider enterprise context, and start making sure that there's speed across from the channel all the way through to the platform. And then I also think that in South Africa, our partners who needs to help us with that thought that implementing in South Africa is as easy as implementing internationally. We have our own, so Azure has its own instance in South Africa, and it is damn hard for the vendors to get those applications up and running. Payments also has security, and I think again our security patterns is important, but it's challenging, and therefore again people now need to learn about data. They need to learn about ISO 222. They need to learn about cloud. They need to learn about security, and then we also have understanding our clients. And all of a sudden, when we start testing with our clients, the things we envisioned, which would be beautiful on all our boards and on our screen designs, our clients come and says, I don't understand why you want to ask me that. Why are you doing this? Why are you doing that? So I think there's new execution practices. There are new modernized architectural principles. And then there are new skills that is required. And then our partners also needs to learn. So if you go and look at everything, you are learning 6 things all at once, and everything is new. And I think that just makes it it's ambitious and it's wonderful, but it makes it very, very complex.
Yeah, I would like to add something here, and Maurits, I think that what Marika say is exactly what we are experiencing at the global level, and we say simply that it's not just a new technology or a new standard, but it's the way we bank that is changing. And when you said, Marika, new skill, you're right. So the back office and the operational guys, they are changing their job because there is quite a lot of knowledge, and the partnership here and the cloud is important, but it's not only the technology. It's just a part of the transformation. So it's all the departments are involved, and this is why we see similar, let's say, challenging in other payment ecosystem. Many working groups are working on this. You said another important thing, so that success is coming only if we work together at international level and not individual on the single bank. So, yeah, I think that is very important that this message arrives in South Africa, because I think that is exactly what is happening in every payment ecosystem that is going through the transformation.
Moritz, just to add to what Dome is saying, if you go and look, he's so right, and I didn't even mention that, you are spot on. In our operational space, we are seeing you are moving from bulk settlement to itemized settlement. And all of a sudden, your operational staff needs to go and do very complex reconciliation. And now there's a very different timing difference and a haste to it, because there is also a way of picking up fraud. And apart from that, even the way we service our clients, particularly our businesses and our corporates. You can't have a call center who just picks up the call and says, I'm logging it. The client wants to understand, why is my files rejected? Where is my pane 12s? What has happened? Why did I get a camped 54? And all of this has to happen quickly. So even the servicing model has to change, and therefore Dome is right. it's across every single discipline. You're so right. I forgot to mention it, but you are so spot on, Dom. I agree.
Yeah, absolutely. No, and that makes it tough and very complex. Moving on, however, from what we're busy with now, with the Rapid Payments Program, Ravi, this hasn't been our first modernization. It's not been South Africa's first foray into 2022. That, in fact, has been the debit check system. So just from a broader modernization picture, where does it fit in? How is it contributing to modernization? What did South Africa actually do with debit check that probably highlights this as an important first step in our modernization effort?
Yeah, thanks, Maurits. I think, debit check was our response to modernization of the debits payments rail in South Africa, and I think debit check was a regulatory intervention, and it was to manage fraud, right? And predominantly it was rogue debit order users impacting consumers. So I think, just listening to Mareka and Dom talk, I think there's a lot of parallels between the debit check program and the rapid payments program. As we've seen in debit check, we focused a lot on the payments capability. I think we over-engineered the debit check program. I think we can make it a lot more simplistic. The debit check program, I think, touched the breadth and depth of the organization, similar to rapid payments. The key thing in terms of mandate origination was the fact that, it changed the business, the credit origination, sales, and also the operational processes in the bank. And I think that's something that we didn't foresee. Or we were slow to respond because we focused on the capability of debit check. I think the second big thing, and I think it's a big parallel between debit check and rapid payments, is that I think we need to manage the transition for the customer, right, in terms of experience and usability. I think that's going to be a critical success factor for us in the rapid payments program. We're going to be introducing new payments capabilities, new terminology like proxy, request to pay. And it's going to be critically important of how customers resonate with it, how we brand it, how customers associate with it, how do they experience it. And the key thing, just like debit check, this program is going to touch the breadth and the depth of the organization, from the channel interfaces all the way back to the operational supporting systems and interfaces. And I think the key for us is going to be, how do we keep it simplistic? So in the implementation framework, how do we make it simplistic? But to the points that Mareka has raised and to the points that Dom has raised, is how do we bring all of the components of the bank along the journey with us? And I think the big one for us is this customer experience and usability for the consumer. I think if we don't crack that one, we're experiencing that problem now in debit check. We've kind of stabilized the capability in payments in the rail, but we're finding it very tough to get consumers to actually come on and actually authenticate the mandate. So that's about the experience issues. It's also about, a multitude of other factors. But I think there's a lot of parallels between the two big programs. I think, debit check started off us on the modernization of debits, and over and above the cash imperatives of rapid payments, it has a big modernization drive of the credit rails in South Africa. Yeah, thanks, Maurits. Yeah. Hopefully I've done the question justice here.
Yeah, no, I think you've done. But I think what you highlight, similar to Mareka, is it's not just a bit about a technical change, a technical innovation, a new message standards. It changes, it cuts across processes, it cuts across customer interfaces. There's behavioral challenges. So these things are so encompassing. And therefore, I think we often say ISO 20022 is a technical change, but it's actually more of a behavioral, organizational change, industry change even, if I think about debit check. Last question. I think let's do a bit of crystal ball gazing. So we're busy with modernization, and certainly these things we talk about all play a big role, but I think there's also new things coming, so CBDC, I think the Bank of International Settlements has been specific to say that when they think about a real-time payment system, and they think about elements like there's a register of user, the real names of the users are linked together with some or other form of proxy. At a bank level, there's a record of payment, there's standards, there's rules. That a large part of a retail-based CBD system is actually there, built already. What is your views on that? Are we laying certain tracks down to use much wider than what we currently perhaps envisage? If you think about QR codes use in rapid payments, if you think about a proxy capability as a abstracted service, can one start to think about different users, other users? Will it even support things like CBDC? I'm going to ask Simon perhaps to share a few thoughts on that, and then Mareike perhaps also on the technical side a few ideas of how is what we are building here a very good sound platform for the future.
Yeah, Maurits, I think the thing that struck us about rapid payments in our accelerator, which is focused on the human-centered aspects of rapid payments that have been discussed in the previous questions, is just the amount of innovation that's possible when you put a team that really understands the rail to the task of understanding what they could do for customers differently. So I mean, the collections use cases and the transformation of things like promises to pay, recurring payments, and the way they're set up, and disrupting our own rails, if you like, around things like that, bill payments, and how customers prefer to pay, transacting at the point of sale with QR, online and e-commerce. All enabled by this simple idea of a request to pay that gets brokered over the rapid payment rail. So I think we're going to have ourselves busy for quite a while unraveling the multitude of base use cases that become available, and hopefully our all segments within our businesses respond. I think this has been one of the key and interesting parts of implementing the new rail. I think where there was less involvement with some of the other implementations, we have extremely broad-based segment involvement, certainly from a Standard Bank perspective, in designing these customer experiences, both from a corporate, a business banking, and on the consumer side. So I think it's going to unlock a lot of value for all participants. To your point around whether or not the rail becomes the rail on which we unlock a central bank digital currency or some form of stable coin based payment in a South African market context, I think there is a possibility, and it's an interesting starting proposition and prospect. But I do, and maybe it goes down that road, and there's a way to steer it that it becomes kind of a very stable entry point for a highly regulated environment to come to terms and get comfortable with how something like that is implemented. I do think, though, that the fintech market and what you see some of the crypto operators bringing to local shores is going to move equally, if not faster. And I think the technologies they have in mind to enable these things are perhaps off rail, creating new rails altogether for immediate interbank settlement. So it'll be an interesting race, but I certainly think as the stablecoin debate heats up off the back of the PASA initiative, it may be an interesting POC to run in a very stable, known environment, hopefully, that is established by the time regulation is ready to move down the central bank digital currency road.
Thank you, Simon. Marika, any thoughts from your side?
Maurits, in the interest of time, I absolutely agree with Simon's sentiment. I think there's philosophically there's good opportunities, but I do agree that I think there's already superior technology for those use cases that may actually augment what we have at the moment. Thank you very much.
Thank you very much. And I think with that, we've kind of run out of time. And I just want to thank my panelists for this very, very interesting conversation. Thank you so much. Very interesting topic. I think we can all spend hours and hours talking about this, but this is probably as best as we can do for tonight. Thank you very much.
Thank you.
Thank you.
Well, thank you, Maurits, and many thanks to our dear panelists for a great discussion and for sharing your time and your expertise with us today. To our audience who's watching us right now, for any questions submitted that we didn't manage to address during this hour, we'll make sure to follow up with each one of you separately. And with that, I would also like to remind you that we will be circulating a copy of today's discussion in the next couple of hours. Finally, on behalf of Volante and Connect Global Group, thank you all for tuning in, and we look forward to seeing you at our next webinar. Thank you and have a lovely day further.